Hey everybody, welcome to Markets for Millennials. This is Justin. Today, I think what we'll do is we'll take a look at commodities today. Just kind of feeling this out because until this week, I never was ever going live. So some of you might have already figured out I'm not quite as strong in my flow on these live streams. But go ahead and take a minute and smash the like button if you have not already. Subscribe to the channel. And I think, obviously, sorry, I've got some technical difficulties here. Yeah, so I don't know, there's a lot of things going on in the market today. I think it's interesting to point out that the DXY, we did not make a new high right here. We wicked up to the same level. What is this? See the high, the wick high, 93,191 right here. Oh, we did by 0.001, right? So, but it wasn't enough. Obviously, a couple days ago I put this trend line right here. I've been messing with various trend lines over the last few months, trying to line different things up. It's not totally clean, but it looks like, at least right now, that the market is respecting that in terms of its closing prices, at least on daily. So that's something to pay attention to. You can see if we zoom into a different time frame, the 8-hour here, obviously popped above, came back down over the last 24 hours. So whatever move we had to the upside has not held thus far, and I think it's and we're just getting our bearings here before we look at the commodities. But as you can see here on the daily, we have an engulfing. It's basically an engulfing candle. I don't really know if this opened at exactly, let's see, 93.066. Close here was 93.069. So not really technically an engulfing candle, but it is a pretty big deal that price came up higher than our wick from yesterday, and we actually have come now down and closed below not just the body but also the wick of the previous candle. So that's a pretty good downside move. Now near term, right, so these trend lines are obviously showing you the upward trend line, and so near term we are still on our way up. And so obviously for the dollar index, which, side note reminder, is it's a weighted, or it's a basket of currencies against the dollar. And so 50% of it is the euro. So, so it's relative to other currencies. It doesn't really have anything to do with, the actual spending power of the dollar. And so what I think is important as we get ready to look at commodities is that the DXY can be on an uptrend and commodities can still rise, because if the dollar is, if like say the euro especially or the Japanese yen are being devalued at a higher rate than the US dollar, then the DXY is going to show strength to the upside. But ultimately, things are still becoming more expensive. We still have asset price inflation, especially in commodities, or at least we have over the last 6 months to a year. We'll take a look at them in just a minute. We'll get our bearings. Near term, like I said, the trend is up. So we're looking first to see, are we going to hold this little channel, which is made up of this cloned trend line. We have the top side band of the channel, and then we have this trend line here, which is cloned from the prime trend line here. And if this doesn't hold, then we're looking at this trend line and then this trend line. So we have a couple of different tiers before we have to be concerned. And then if we do break below the prime trend line, then the next step is going to be to test this trend line, which is basically what we're looking at from our lows back in January, beginning of January. You could also maybe go with a horizontal level right around, what is that, 89.49, so 89.50ish or something like that. But we're looking for this area next if these three successive lines end up being broken through. The overall trend, the long-term trend, is down ever since at least early 2020. It's interesting if you actually like take a step back and you consider, if you want to look at this as, a big channel, right? So look at this. I mean, how would you want to do this? Like maybe like that, this whole big channel, you could do it that way. Again, it really depends on your time preference. People who are trying to day trade or swing trade, looking at the dollar index, and some people are a little obsessive about that. They want too much action, and we get too glued to our screens, into kind of the euphoria, the rush of when price is, in our favor on one day, and we get super emotional when price is not in our favor the other way. So just getting a look at the dollar, and then yields. We've also seen yields come off. If you were watching during the music, you saw me draw this over the top of a trend line because yields were making a threat to come up into what was originally, so my original bull flag was right here. Just kept extending it out, and then we broke below it, and then I just cloned the trend lines below it. And you can see that it actually worked as resistance. And now we were coming up to test not only the descending trend line from the bull flag, but also this long-term trend line, which goes back to August of 2020. And so that's actually a pretty big deal. I mentioned yesterday or the day before, or maybe in my weekly update last week on Friday, that we came up and tested the ascending trend line once, and here we are doing it again, and so far we're being rejected. And so what I'm looking to see is, will we close at a lower low, or will we kind of bounce around up here? So even though the near-term trend line is down, we are making this kind of counter near trend move up. It's gonna, and maybe if you want to go back and look from 2020, August 2020, so a year ago, over the last year we're up, but again, this is a really big spot that you got to be watching out for, and so we'll be looking over the next few days to see where is price in. Is it going to stay in this range, or is it going to go up, or is it going to go down? And that's going to set the trajectory for commodities like gold and silver. Also things like Bitcoin, but today we're not going to look at Bitcoin. We're going to look at the commodities. I just have a list. I've had this list for a while, but I just have this list of commodities. We'll start with gold and silver. We had that flash crash overnight. I think it was over a span of 30 minutes. Price crashed to about 1675, and then we've come up. Since then, we got back above the support here at 1746, which had been a resistance level from our bounce back in March of this year, and was resistance going back to April, May, and June of 2020. So we are above that. We've got a lot of work to do. I've got these like horizontal resistance levels. There are people who don't think that that's as big of a deal to watch out for in trending markets, and obviously the trend since August of 2020 has been down, and so if we're going to look at this in terms of just the trend lines, the prevailing trends, what we got to see is gold get back above this descending trend line, retest it, and resume off. And that's, the horizontal lines notwithstanding. So that's something to be watching out for sure. We are finding, again, long-term support. I talked about this recently. How many different trend lines do I have to show you? How many of them do I have to darken up to show you these trend lines, which go back multi-year? And obviously, the longer the trend, the longer term the trend line and the symmetry, the stronger. So even though we have been, basically consolidating down and sideways for a year in this huge channel, the prevailing trend for the last 5 years has been up for the most part. So this trend line carrying a lot of weight right here. And so just like it carried weight back there and back there. So we'll be watching over the next few days to see, are we getting just a little bounce here? Are we gonna break down off of this resistance and go lower? What are we gonna do? So that's what we're looking at on gold. Silver, we barely closed above this pretty key level, which I have here at my level was at, here we go, at 2350 essentially. And just like with gold, we have a prevailing trending line that we need to get above. So I actually, if I extended this, it's not perfect. But what we're going to be looking at is to get above that and retest it. And actually, what would really be helpful is if getting above it and retesting it happened at a confluence of the descending trend line and of the horizontal resistance. If we could get above that and retest it right around the same level, that would be a lot better from a technical standpoint, in my view. And so they have a lot of work to get done before they are attractive again. Now, if you believe in the macro backdrop, if you believe the inflation narrative, if you believe there may be another crisis looming, then obviously, anytime's a good time for gold and silver. I don't have it on this chart, or on this list. I'm going to have to go back here. I was marking up my gold to silver ratio. Again, just very, very, look at, if you want to look at like the trend, the significance and the momentum of the trend, fairly flat here, and then we are just starting to curl to the upside. So the momentum in terms of the gold to silver ratio is really picking up. And I've said this frequently, your gold to silver ratio should be actually heading down in a precious metals bull market. So the fact that it's not, leads me towards, considering the story with yields and the story, the kind of the deflation story. Again, like I know that word, it's kind of like a buzzword and people use it. I don't mean to say that assets are not inflating, because assets are inflating, but obviously gold is an inflation asset. And so it does give some credence to the idea that we're in a more deflationary environment near term. Okay, keyword near term. Ever since August of last year, I mean, like, look at, if you want to compare, let's go back. Ever since the March low, right, during the crisis, gold went shooting up in comparison to silver. Silver got destroyed. Gold, lost value as well, but gold recovered and held up better. And then you just have this massive move down, for 6 months, for almost 6 whole months, right? So then if you look at the, the silver chart during those 6 months, like silver was on a tear, right? So that's just to show you, in a precious metals bull market, you should see silver outperforming. It should look more like this in that kind of environment. And yet you're actually now, for the last few months, most of this year, 2021, you're seeing silver underperform gold. And so that's something I want to pay attention to, because I think I've said this in my, in my weekly updates. I feel like a lot lately I'm getting mixed signals from the market. The markets are not telling me all the same story. Okay, so I have to organize this a little bit still. So I'm going to try to not accidentally, go to all my same charts again. These are the CFDs on copper. I may or may not have another copper chart on here. I'm not really certain. Just getting back into looking at the commodities as a whole. You can actually see here, we've been on an uptrend. This is, part of the inflation narrative. Just look at the price movement, right? If you look at from 2018 to 2020, the trend was down, obviously clear downtrend. And now ever since the March low, we've had a clear uptrend, And so that's what I'm looking at. I'm actually curious now that I just did that. I'm curious on what happens if I try to move this trend line. Let's see here, right there. Look at that. Look at those touches. Yeah, that's good. Yeah, I think that's good. I think that's a good line. And so we're kind of in this situation where, you know, we've got this descending trend line. So we're consolidating, and so we're either going to break down or we're going to break up. And it's not entirely clear. I do want you also to see kind of the way that markets often move. You can see that there's periods of time where price is moving up, but then there's also these periods where price is consolidating, right? So you have kind of the sideways markets. So I hope you see that, because you know, a lot of people, they'll buy, like, you know, people lately who are looking for the move on copper, they'll buy up here, and then price consolidates and they get frustrated, and then, you know, usually right around here, people are like, oh, please just get back up to where I bought, and then I'll get out so I can break even. And they end up holding on to a losing trade for a long time. And then eventually they get to a point where they're like, you know what, screw it, I'm going to cut my losses. And that's when you get the run up, you know, to the next little high. Not always, but I feel like that happens a lot. So that's why it's so important to keep your emotions in check. So copper consolidating. Here we got platinum. Platinum is not quite as hot as copper. Chart does not look quite as good, in my opinion, as on copper, as you can see here. If we, I don't like that pops up all the time. But even if we use this, actually this is a really good demonstration right here. Look at this, the trend was up, and then we actually had a breakdown, and we've retested it successfully. Look at that wick. Retest right there. And we're resuming down, and if you also see, you're creating lower lows, right? So platinum does not look very good right now. You've got a similar sort of trend line. That's really awful, actually. So I'm just gonna go like this, lighten this up. It's not yellow, whatever. That's kind of what we're looking for in terms of, it's interesting actually, wow. If you go right before the February-March crash, we're at those same levels. That's kind of important, I think. I think if you also, maybe we'll put, I think we've got some support there. The support that we bounced off of, pretty important there. And then maybe right here as well. It's a little squiggly, I apologize. So we're going to be looking at that to see what's going to happen. I don't know, it doesn't look good. Obviously I'm going to stay away from this. You can see like it's having a similar consolidation like around the same time, but it's obviously doing a lot worse. Coffee. So I'm going to skip around a little bit. So here's coffee. This coffee chart's insane. Okay, look at that move. Boom. What is that move? I don't even know. In a span of 6 days, 34% move up. You know what that reminds me of? Reminds me of lumber. A little bit different because lumber, like, I don't know if you follow me on Twitter, Mr. J. Thomason, you have seen me post about this. I've talked about this before. I put this in my other videos. Geez, like, I mean, is this this is the Wall Street cheat sheet. Exactly. So, I don't know, I feel like coffee has had a move like that. So actually, if this is a blow off top, then you're going to see this come up right about there and then just continue down like that. And then it's just going to go bear market. And actually, like let me move this over a little bit. You know, if you draw like that, it would look like the Wall Street cheat sheet. So I don't know. That's something I would be looking at. So coffee, you should not chase this. There are people who they bought it again up here because they're like, it's gonna go to what is it at? This price up here, this high was at 215. They're like, it's gonna go to 300. People probably bought, and then right here, it's bouncing, and it looks like it's taking off like it did over here, and it totally could, but it's not a good risk to reward right here, so you would want to avoid that. Again, like one of the things I'm paying attention to as I look at commodities is like, is it inflation? Like, are we seeing inflation? I think in the big picture prices are going up, but on the charts, is the market pricing in deflation? Is that why we're seeing these sell down? I'm not really sure. Here's WTI. I actually don't like this. I want a different chart. I'm gonna have to go back over here so I can pull up my WTI chart. Yeah, getting that consolidation again. Again, not making a lower low. It'll be interesting to see over the next few days, can we break above this and move on up? Are we going to bounce down, or are we not even going to hit that? Are we just going to break down? Well, I guess, you know, what's good about this is all the commodities are essentially telling a similar story right now. Copper chart looks a lot like, oh wait, that's the copper chart. There it is. So actually, I can get rid of this one. So that's the copper chart. We were talking about that earlier. Nickel. Nickel is the only one that actually is not seeing the same price action. So what I would have expected is, you know, if nickel was going to behave like, you know, copper or some of the other commodities, I would have expected to see the consolidation like this. What I think is interesting to note, so if you go to, let's go to the you know, middle or end of March, and specifically I want to look at the NASDAQ. So look at this. I don't think it's a coincidence, right? If we're looking at this time range and look at where price has gone on the NASDAQ, right? And then you go back to your commodities and you look at nickel, right? Because I think nickel is much more significant in terms of, I wonder what the relation is. You know, I'm not an expert. I won't claim to be an expert. I'm not going to try to say things that are not true here. But to me, you see the potential importance of nickel, right, to the tech space, and in that its price is moving essentially along with it. Although you actually are seeing, unlike the NASDAQ, right, the NASDAQ is starting to curl over and you know, roll over and go to the downside a bit. But the nickel chart is actually, you're seeing the slope of the uptrend of the up move increase. And maybe some of you are like, oh, we're coming down. But if I actually drew this properly, we've already kind of broken through that. So nickel looking pretty decent, but I'm not interested in the you know, in chasing it. If you actually look, right here would have been a really good like support level to buy off of, mostly because if you think about it, this type of price action, just like huge price increases to the upside, you know, over a short time span, are not sustainable. When I see this is almost like a flash crash over 2 days. When I see that, I'm like, okay, I'm going to find where it's going to get support. Right, so once it had support over here for a couple of days, I would have bought here. If I was trading commodities, if I was doing commodity futures, that's where I would have bought, because this is not normal. And to me, this type of price action is overreaction. And so obviously it is, because ever since then, I mean, it's gone past its all-time high. Right, so that's going to be something that I would pay attention to. I'm also seeing right here, that's a good support level that you'd want to pay attention to. And then over the next few days, we're going to see if this level is going to be established. So be looking for that on nickel. Brent crude, not going to look at crude, Brent crude. Corn, enjoying the corn, huh? Yeah, I mean, over the last year and a half, it kind of looks like the Wall Street cheat sheet. Not as many like waves, huge waves like the lumber chart. But this is kind of interesting, because here you see this looks like a blow off top and then the dead cat bounce. And so are we going to see price come down there? I don't actually know, because if you actually look, this looks like, follow my mouse, this is really strong support. At least it looks like it to me. You know, so the fact that, you know, prices had these moves down and it's been kind of bouncing along here, I don't know, this looks like it could go up. So this would definitely be something. You see this, you can actually see if you're going to trade this, two choices. I think you have this wick right here from July 9th, which I would say maybe that would be a good stop loss to the upside right there if you're going to take that trade. And then maybe an even safer stop loss if you can manage it. If you look at this wick down over here from January 25th, that's right about there. That would be an even safer stop loss. If you actually think about it too, the risk to reward. So if you took the trade here, you know, 1-to-1, 2-to-1, 3-to-1, right? So once you get to the top of this range, if you make it back up to the top of the range, that's a 3-to-1 move. So that's going to be something to look at. Let's go here. Wheat. Wheat is looking like some of the other charts, except that one thing that I think is interesting is if you look, you know, the trend on wheat, you do something like that. That's the prevailing trend, so going slightly up ever since 2016. But then in 2020, right, and 2021, you actually see something a lot different. You see this move, right? And so the rate, the momentum to the upside was really huge. But I think it's interesting too to see like how this looks. I've been talking about this a lot with people on crypto. You can actually see when you get these moves to the upside and then you retrace. If you pay really close attention, these things are retracing 30 to 50% of their moves, or in this case, the move was almost 100% retraced right here. Right, so the steeper the move to the upside, you know, probably the more likely you have a larger dip to the downside. And so that's something to take note of. It's something to pay attention to, I think. So as far as it goes for wheat, we're going to draw this trend line right here. We're going to see if wheat follows kind of a similar pattern as on copper. Right, it kind of looks similar. So that's going to be something to watch. It looks like, you know, maybe I'm going to get rid of this, and I think maybe we'll stick this trend line like right there. That looks safe to me for now. We'll start with that. Have to go back to it a little bit later. But you are into resistance here. This is again like, this looks pretty good, but because it's into this resistance, you're waiting for a breakout and retest and resumption for that entry. Okay, so don't be in a rush. You know, there's always early bears, there's always early bulls. You don't want to be early because the likelihood of you being successful if you're early is much smaller, and your risk or the potential return versus potential loss is a lot better if you wait for those retests and the resumption off. Soybeans, I don't know if I looked at soybeans already. I don't think so. Losing track. I got to reorganize my chart list. This kind of looks like similar to what was the chart earlier? Looks very similar to corn, right? And so what I'm wondering is, see, like it's different though, because with corn, let me go back to corn. You can actually see, you see how we have this very good solid support. I don't see that same thing. In fact, if I'm trying to be, you know, fair and equal here, it actually looks like we're below the important support. But if I want to be, you know, I'm just going to give it the benefit of the doubt. I'm going to stick the support right there. You can actually see, if you look at the crosshair and the dotted line across, you could see maybe it's support there. But even if it is, you've got resistance, you know, right there. And you've also got a descending trend line that you're going to want to watch. This doesn't look as good as, you know, like it doesn't look as good as a place to buy as like maybe corn would. And so again, like I think, other than, let's see, other than nickel, I feel like, again, there's the caveat to this is that nickel is definitely doing better, and it seems to me to be tracking the NASDAQ and the tech sector for the most part, not exactly, but for the most part, in terms of the last 2 or 3 months of price action. But the rest of the commodities, they're all telling the same story, and maybe it's because they, all the commodities have had such a run that they have to give back some of what they got, because there was so much of a rush into the commodities because of the inflation narrative. So then I wonder now, is the market pricing in a deflationary period? And that's what's interesting. A lot of people are talking about that. Now, I'm not going to do the whole, I feel like I have to go back to this. I'm not doing the whole, QE is deflationary, and I'm not doing that kind of stuff. I'm just saying the market is telling us something different than what a lot of us have assumed about what's going on. And so the question is the market wrong, or are we wrong? So I think that's the important question that you need to consider. And then again, to go back to lumber, I'm going to look at the lumber chart because it's fun to just look at the Wall Street cheat sheet. It's like, oh, it's dead, oh, it's dead, oh, and then right here is where people buy, and they're like, ooh, it's going to go to 1 million, and then it sells down, and then they end up losing more money. So it's just fun to look at. So that's a look at the commodities. Again, the yields and the dollar are going to be pretty important to track, but it does seem like all the commodities other than nickel are telling a similar story. So if you're thinking about buying, some people look at this chart and they're like, oh, then, are you saying I should buy nickel? No, I'm not saying that, because it worries me when, I can give you 2 reasons. It worries me when everything in a particular sector is telling the same story except for one thing, because is it more likely that all of the other commodities are wrong, or is it more likely that nickel is wrong, or that something else is going on with nickel? The other thing is, because it seems to me like nickel is tracking the price of the NASDAQ, or more closely tracking the price of the NASDAQ, and you look at what happened on the NASDAQ, and it looks like we're going to close down below. It looks like we have closed down below our ascending trend line, and it looks like we might, be getting ready for a correction potentially. Then I don't know. To me, that's worrisome. So in that kind of situation, it's like I've talked about in general with the markets in general. I would rather be on the sidelines here, because even the commodities are not, most of the commodities are agreeing, but nickel is not agreeing, and gold and silver are not agreeing. And so for that reason, I'm pausing, and I'm not looking for trades. I'm just going to watch. I'm just going to wait and see. So I'm going to flag this because I want to know what's going to be happening on this one specifically as we go forward. So that's the look for today at the commodities. Thanks for joining my Markets for Millennials. Don't forget to like and subscribe and share. I'm going to try to look at different segments of the market each day of the week. So again, Monday was a general look. Yesterday was a look at the sectors of the stock market. Today was a look at commodities, and we'll figure out what we are going to do tomorrow when that time comes. Thanks for watching, and I hope you guys have a wonderful day.